All right, so Julia, the estimate's 214,000, but you have a bit of a different forecast. What is your forecast and why?
Well, let me just unpack that number for you for a second. The magic number to watch is 284,000. If that's what we get, then the fourth quarter is on pace to show stable job growth since the second quarter. The second quarter and third quarter were basically flat at 148,000 monthly gains. So if that's the average, if that's what we get, then we're still averaging on that pace for Q4. What economists are basically saying with this 214,000 estimate is that the slowing trend that we saw over the course of the year is continuing. And what I'm most nervous about is that the breadth of job gains could also be continuing to narrow. They've been extremely narrowly concentrated in the last couple of months. I think we could even see a lower number than this.
All right, so you think we could see a lower number than 214. Let's get to what you're talking about is the job gains narrowing. There are certain sectors, obviously, that are driving the gains. Things like hospitality have certainly seen a lot of gains over recent months. When you say it's narrowing, exactly what do you mean? Do you expect to see weakness in certain sectors? Is it seasonal weakness, or is it what you believe might be structural weakness that's going to continue into 2025?
So even ignoring the dismal report that we got in October, just looking at Q3, 113% of the job gains came from just 4 super sectors, which only account for half of employment. So the other half of the labor market wasn't just treading water, it was moving backwards and losing jobs. And that is why so many job seekers still are having a really tough time finding work. This is a great labor market with unprecedented job security if you have a job that you like. But if you are a newcomer, if you are a new entrant, if you're a new grad, it's actually quite tough to find new work.
That's a difficult setup for a lot of people graduating, as you just mentioned. One of the sectors that's been driving the gains is government. Obviously, we have a new administration coming in, pledging, efficiency with the DOGE, the Department of Government Efficiency. How do you see that possibly impacting government hiring going forward?
So government hiring this year has been unusually rapid, and so has hiring in the healthcare sector. If job openings and online job postings are any indicator, those are both likely to normalize and slow back to their normal pre-pandemic pace anyway, even before the new administration steps in. And that could lead to even slower gains across the labor market. If even the bright spots in the labor market are slowing, what does that mean for new job seekers? At least now, many are actually managing to switch industries. About half of the job seekers who are finding jobs right now are having to switch into a different industry than the one they started looking at.
All right, Julia, let's bottom line it for investors. What does this all mean for the Fed? December seems more than likely to happen, but what about going forward?
So, of course, for a while, inflation data was coming in better than expected, but that has changed. The last couple of months were hotter. And so markets are now pricing in far fewer cuts than initially thought. It seems like the next decision will more likely than not be a cut, but it's borderline. And the Fed may slow the pace of cuts afterwards, which would not be good news for job seekers and workers or investors.